Cool, brilliant. Okay, welcome traders. First of all, nice bit of movement this week, especially today. Initially this morning, I did feel that we were going to see a lot of these breakouts of the daily ranges we've been mixed up in. A lot of prices actually moved back within that range, so potential for another break to the high or low of our daily ranges, but we'll go through that very, very shortly. But first of all, tell me about your trades. What have you done this week? What are you in currently? How well you've done this week. I mean, a lot of you have sent some fantastic profit shots. I will post them for the rest of the group to see shortly. And I think one lesson that was important today was pretty much what we've been saying over the last couple of weeks is split your trading sessions into two, because we're seeing a lot of volume being pumped into the Asian session. Nine out of 10 of us are asleep when most of the moves throughout the night happen. And we're seeing a follow-on and a continuation into the European session. By the time we get to about 7 o'clock, things are really bubbling. There's a lot of movement, a lot of excitement, shall we say. And that's exactly what we saw this morning. Intraday trading opportunities were fantastic today. If you managed tight, had a take profit in place, targeted the previous high or low, you would have been in and out and made some nice money. One of the guys here, Daniel Spencer, 260 pips made yesterday. Well done, mate. Good stuff. So that's how I feel. Most sessions have to be split up into two. The American session, there's been less volume in my eyes, but they also tend to spin things around and upset what we've done in the morning. So I feel the importance of treating it as two separate jobs, very high, in fact. Get your morning job out the way, get your afternoon, or prepare for your afternoon job, which is the US session. So a couple of minutes, guys, just let me know what you've been trading today, what you have your eye on, what you've traded this week, how this week has been for you. Made 3% today and yesterday, fantastic. Pound dollar big sell today, well done. Euro pound, interesting. I haven't actually taken Euro pound myself. Indices, yeah, I mean, we've had a good turnaround within the indice equity market. Good stuff. All right, well, we'll crack on with the charts, guys. As always, this is your time. So any questions that you have, please do not hesitate to ask. Any topics that you want me to cover, I'm more than welcome to cover. And of course, I always love some feedback. So just like we done the back testing webinar a couple of weeks ago, if you'd like me to look into another topic, another issue, more than happy to do so, or sort of cater a video or a webinar around something that you need. We're always here to help, so just remember that, guys. So cool, we'll get stuck in. Brilliant, Lily. First day profitable, first day trading. Lovely to see. Cool. Yeah, I agree with some of the watch list or the currency pairs you have on your watch list. Cool. So let's get into it now. Dollar index, look where we are, guys. We're back in this boring range, back above 99. And the last few weeks we've been following, I mean, we've been in this range for 2 months nearly. Again, 100.40 is our break to buy. 99 is our break to sell. As you can all see, and I'm just going to zoom in here so we sort of see this a little bit clearer now. It's very difficult to trade around these parameters when we have such strong support in place and such strong resistance in place. Now, this is a 200 pip move. So yes, we're going to find opportunities to trade within this, just like we did today. When we're in this range, we now need to think about how, when we get out of the range, what we're going to do and how we're going to get out this range. So if we start to look at things slightly more in detail, there's your lower high formation. At present, yes, price wicked below the lower low, but it's not really a confirmed lower low. We're not breaking low like this. Now, we may see another bearish day, and if we see a bearish close tomorrow, I'd quite like to think that we will come down, break the moving averages, create some more lows, pull back lower high, and perhaps have a move low, which is quite possibly on the cards. But there's nothing we can do from a longer term perspective all the time we're wrapped up in this range. We have to break out of it. Just to drop down to an hourly chart. Now, when I see this, technically there are trading opportunities. Downtrend, double bottom, uptrend. You've got a couple of trading opportunities if you didn't take it from the level in here. Price then moves, fails to continue making higher highs and higher lows, which is our typical pattern we see in an uptrend. What we're seeing here is a head and shoulders reversal pattern on a smaller scale. Price moves down, back down to 99, which would have had to have been a target, considering we've been rejecting it as a level of support for so long now. 2050 moving average crossover confirmed the change of direction or a change in momentum sentiment, should we say. And then we saw a break above. Now, once we meet this level, we now have to be on red alert. Personally, for me, I like to be out of trades when we're in and around key support levels. If we break it, I'll get back in. If it rejects it, I'll then adjust. And what we saw here is price come back up, test the 20 moving average, news-related volume pumping the chart. I mean, the swing of this bar is, of course, 64 pips within the hour. Not too significant, but is big for a chart of the dollar index. This has obviously moved when the equity started moving, and you're going to see a lot of jump around across the next couple of days and weeks, guys. As soon as any economy starts to talk about a cure for the coronavirus, it's going to boost the equity market. It's going to boost certain markets, and with the correlations that we're seeing at the moment, it's going to affect the FX market too. So we always have to bear that in mind. So this was a bit of a fake out. Price didn't confirm a move below. Would have liked to have done. And we're now pretty much back to where we started. So nothing exciting in here for me. For me to trade this and have an understanding, well, the daily chart, as we said, we're either going to come back up to 140 or we're going to break below. If we break below, I now need to think about the daily closing below and retesting. That would be the perfect textbook trading opportunity. If we move to a 4 hour, and the reason I'm sitting at the 4 hour rather than the 1 hour, guys, is because you've got to break a pattern in here. There's not lower highs, lower lows. There's not higher highs, higher lows. So cyclicity is not clear. Therefore, we do not know what's going on our hourly chart. So naturally, we have to move back to the 4 hour, a less messier chart, a clearer cyclicity chart. And we can see that we are now seeing potentially this. So for me to do anything, I'll need a 4 hour rejection tomorrow morning. And in fact, I'll need a whole daily cycle rejection of 99. So for the dollar, 99 is our key focus at the minute. All the time we're pissing in and around this point, I wouldn't bother doing anything. Let's wait for a break below as confirmation, potential 4 hour break and retest tomorrow morning, which will coincide the daily close. And of course, if we can break the daily 200, fantastic. Once we break that daily 200, if you miss the initial 4 hour cycle, have to wait for that, guys, and then break lower. That is potentially what we're going to see. If we don't see the bears take control, then we're back to what we've been doing the last couple of weeks. Buy off 99 and let price follow through. So it's a waiting game. Makes sense? Does anybody agree? Does anybody disagree? Any other comments to anything you can, any comment I can repeat and that's going to help the rest of you guys? Wait and see, fantastic. And if you look at, I'm just going to skip and have a look at the indices, guys. You look at S&P today, trading back above 3,000, right? Now, this also showed false hope today because we had such a strong bullish break above. Now, there's your core strategy working wonders because you've got your cycle. That's still a higher low formation. Bullish close above the 20 moving average. Back up you go. You've got a good few pips in play there. You're looking at 3,002 to 3,036, so a hell of a long way. Now, when we see this, all the time we're above the previous low, we're still buying. This is an hourly time frame. The cycles can move, or cyclicity can go up and down all throughout the day. So all the time we're above the previous high, we're happy. This is just a phase 2. Once we break that low, change a pattern, change the sentiment. We can't now trade the 1 hour chart because I'm used to seeing this in my uptrend. As soon as I see a break of pattern, reversals in play, take a foot off the gas, back to the higher time frames, let's adjust, let's see what we're seeing. Now, prices we can see that the 3,000 strong resistance mark, just to drop you back to a weekly chart, previous resistance back in August, October, and does relate to back to history as well. So that's what we're seeing currently. Now, 4-hour chart is an interesting one because look how we've opened, or look how we're closing up. Pin bar rejection, 4-hour core rules met. For me, this is an interesting chart because we've been bullish recently, driven on sentiment. Technically, as the price started to squeeze in here, we could look at opening the doors up to some short opportunities. Because, of course, this here, which is similar to the Aussie and Kiwi charts, that there starts to squeeze and indicate bearish technicals. This is just being driven, as I say, for sentiment reasons, one of them being coronavirus cures. And that's the talk of the town at the minute. So that is what we're seeing here. So this is a difficult market to trade right now. If we see a bullish break above 3,000, a continuation, then yes, look to continue buying S&P 500 and correlated markets. If we see a break below, then I'd open the doors up to some shorts because 3,000 is strong resistance. Yeah. And for me personally, we're definitely overdue a pullback. And as we can see in here, right? Now, just to look at US 30, again, similar chart. NAS dropped a fair bit today, but I think NAS is sort of leading the way for reversals and pullbacks in play. But S&P is one that we monitor frequently, as you guys know. So just bear that in mind, guys. 3,000 is a key level. Break above, confirmed additional buying. I would only buy intraday. Don't get caught up in any higher time frame trades, large stop losses, or anything like that. Pullbacks, well overdue if we close below the 3,000 mark. Just have a look tomorrow morning. There's no need to dive in right now. I mean, it's 6:15 on a Wednesday evening. Not much is going to happen tonight. In fact, the market closes shortly. Cool. Okay, guys. A couple of questions. When you are unsure on the dollar index direction, like now, do you recommend not trading at all? Potentially, but it's going to do one or two things tomorrow. It will either pull back and we look at dollar buying, it'll break below, we look at dollar selling. That opens up the doors for the major currencies. Once we know what we're doing with the direction of the majors, as an example, if we're selling Aussie, then we look at the Aussie cross pairs and look for a strong currency to sell Aussie against. So that's how we move in that sense. Regarding the DAX trade that we took, still, yeah, I mean, it's flying, as you know. Just remind me of the entry price. I actually took it on a different chart, on a different account. Bear with me, I'll just grab it up. 116.10 was it? Yeah, so you're 55 points up. I mean, it was 100 points up. This still looks like it's progressing at the minute. This is still a core setup to go long. So I wouldn't enter now if you're not live because we're quite late into the move. But if you're still live, then of course you can manage. You should be in a bit of profit. So just allow the market to run. Cool. Another question. I have a question regarding the process of taking my trading education. I've been trading 1 month with you guys. I work 8 till 4 p.m. So I'm doing end of day. I'm not expecting to learn this in a day. Just wondered what advice you can give going forward for my trading. Darren, the most important thing for you is a trading journal and a plan. We have, I mean, look, I would say 78% of you guys are all working, obviously not now, but all working full time. So the goal is to trade to supplement your income, to pretty much earn the same as what you're earning, then think about adjusting your time and getting some time back. So everybody's in your position, and everyone that's more of an advanced level than yourself has been where you are previously, or where you are now, essentially. So it's just about creating a plan, and 8 till 4 is not bad. You can still trade multiple 4-hour cycles, daily opportunities too. Once the daily moves, once the daily is in trend, that's when your intraday trading opportunity comes in. To be honest, if I could, I would only trade the daily chart because you've got most information compact into one bar. It's an easier time frame to trade, easier time frame to read. The reason why we don't is because it lacks opportunities like the smaller time frames do. That is the only reason, but a lot of guys naturally find the balance between a 4-hour time frame because you get more frequent cycles, it's a clearer chart, so you can start to look at two. But feel free to book a coaching session. Your coach will probably be Idge, if not the Obi or one of the other team. Book a coaching session, speak to your coach about it, or get in contact with myself. I'm always around for a quick chat, and we'll work on a plan for yourself. Brilliant. We'll crack back on, guys. I'm going to skip to gold as well, as we can see. Gold, I mentioned the 1700 rejection point for you guys earlier. I know quite a few of you placed a limit order. I actually took an aggressive entry and then closed it in a slight negative and then got back in later this afternoon. I got in too early personally. Just the dollar strength come out and buckled gold and started to retrace slightly further. So again, it's moving well. I'm liking the daily bullish candle. Again, rejecting 1700, forming bullish. It's now 90 odd pips above the 1700 mark. So well done to anybody who took that trading opportunity. Just looking from an hourly time frame, you can see it's now moving and progressing pretty well. Next entry for this, guys, because what we'd expect to see here is an inverse head and shoulders. So we're looking for a buying here. Yes, this won't meet the core rules. So anybody that's slightly more advanced, understands chart structure, chart patterns, then you'll be able to take advantage of this. This will be an early change of direction. And essentially, this is how we can get the best reward to risk, by getting in at the beginning of a higher time frame opportunity. So just keep that in mind, guys. All right, back to the chart. So obviously with dollar index ranging, euro isn't going to look much prettier. We're back testing that infamous 110, which again, we've been doing for quite some time. So the same rules apply here. I actually fancy a break above 110. I can see price moving higher. Again, 107.70 support, higher low formed a couple of days ago, testing 110. Let's get above 110. Look at all this room we've got to move into. Euro does perform well during this time as well, so I do want it to get back up above and start working some wonders, and that will help, because if dollar breaks 99 and moves lower, then euro dollar is going to move higher. So for me, that is the key now, guys. The dollar index is a chart of the dollar against a basket of major currencies, but it's heavily weighted towards euro. Over 50% euro base. So that's why when you look at these charts, essentially they're like a mirror image. They're very, very similar. So same applies for euro now, guys. And if you are an intraday trader, even if you are a 5-minute time frame trader, it doesn't matter. You must know what your dailies are doing to give you any direction of trading. Any direction of trading. And that's where we sit, 110. So nice and easy, guys. Break above, confirm buying. Break below, look to go back down to 107.70 support. And we'll go from there. Cable. Where's cable sit? Again, daily phase 2 in play. Yes, we saw the bears take control. Personally, for me, and I'll just show you that on a 1 hour time frame, that is a solid move lower. As you can see, 5-6 hours worth of selling there. It's not significant for my eyes to actually change the phase just yet. Where we're sitting now, for me, is still in a phase 2. I do still have 24 as a potential rejection point. I mean, looking at the candle, and it's still an inside bar. It's not strong enough for me to now think about selling straight away. So I'm still classing this as a daily phase 2. I'll look for some sort of bearish rejection in and around this 124 mark, and then look at trading back down to 120. I see 120 as an opportunity, guys. I mean, look, it definitely obviously happened in June now. I can't see it happen over the next couple of days. But again, it's only 224 pips away. Price pounds moved more than that in a day before. So let's see how it progresses over the next couple of days. As we know, with some of these major currencies, dollar related, we can consolidate and piss around a bit at this 24 mark before moving lower. So again, as long as we see 120 as an eventual target, daily phase 2, lower highs in play, this is potential of a move lower. So keep that in mind. And again, once we see this move, guys, then we'd expect to see the follow-on from, then we can move to our cross currencies. So if we're looking at pound short, that's pound weakness. So find another strong currency to trade against. Potentially yen. I'll cover yen shortly, but we may see Japanese yen pick up a bit of strength, which will be an easy opportunity to short pound yen. Let's see if this equity market does take a tumble, then I expect some buying to take place on the yen. So that could be an opportunity, guys. Any questions regarding pound? Nice and easy. I think we're all looking at pound shorts at the minute, so let's just sit on our hands until they happen. Aussie's trading at 0.66 at the minute. Interesting. Very interesting. 66.80, as you know, is a level we've traded frequently. Back in last year, we had buying opportunities from the 66.80 mark. Again, back at February, broke through, pulled back. We're now retesting that. Obviously, we're at the end of May as we speak. So interesting now, again, this chart technically, I mean, this is bearish to me in here. As I've discussed with you guys, Aussie's the highest correlated market with the S&P 500, currently equity market, the US equity market. So that's why we've seen a burst out of the technicals and a drive higher. 200 moving averages has lied as strong support previously, and we're trading in and around that, currently just below. 66.80 is the mark for me, guys. If we do see the S&P 500, and this is why I showed you that a moment ago, if we see the S&P 500 drive higher, then yes, fantastic. I'll look at continuing to buy the Aussie, and the Aussie to break above 66.80. If we fail to break above 66.80 and we fall back into this mark, you've got a 400 pip range in here where price is playing between. Oh, you got, let's just move that back higher. As I said, you've got a 400 pip range in here that price is moving, and that would be my target if we look to start seeing a break lower. Again, this does relate with the dollar. If the dollar picks up a bit of strength, Aussie weakens off, then I would expect to see a faster drop in Aussie dollar to perhaps come back down to 62 mark. But again, we just have to wait and see. So S&P 500 drives higher and Aussie breaks above 66.80, then yes, I'll look to buy in this mark. If price fails to break below or break above 66.80 and we start to see some selling action taking place and we monitor the S&P 500 and that starts to move lower, then yes, I'd look for a short back down to 62. So that's the parameter we've got to trade in for shorts, above 66.80 for longs. That is what I'm seeing currently at the minute. Look, we're just going to have to wait and see now. Again, an inside bar rejecting strong resistance in and around the 200. There's various reasons that we could see a rejection before a break higher. So let's keep our eyes on that. Kiwi, again, is off the 62 mark as well. I did mention to you guys once we did break above 5,800 last week that we could meet the 200 moving average, and we're not far from that. If we look at the 62 mark, again, very, very similar to what the previous level was on the Aussie. Again, lows of 2015 met, lows of 2008 met, and we're now back testing that from a break below that. So interesting here, we are very, very low on the chart. Kiwi is typically bullish in and around this period. Other influencing factors kind of stopping the drive in the market, but 200 moving average could be in play. And again, if we see a break above that and move higher, then fantastic. But where we're currently sitting at the minute, we're in a bit of a weird place, should we say, with the majority of the majors ranging. We haven't had big enough moves to give us confirmation of direction just yet. But I do see a move slightly higher here, yes. Cool. Dollar CAD. So last week we highlighted the 39.20 mark, and I said if we see a clean break below that, open the doors up to some shorts. I mean, yesterday's range was 225 pips throughout the day, and we're definitely trading below this mark. So daily pullbacks back into 39.20 and short are valid. For me, we may see a break lower. And again, this really, we're going to really have to pay attention to the dollar. So another one for you guys, if this breaks below 99, opens up the doors for dollar shorts, or help identify dollar shorts, then dollar CAD short could be on the cards. Currently phase one, as you can see, look, break lower, lower high in play, moving averages in the correct order, pull back short. Now, we may not reach 39.20, but if we come back to the 20 moving average tomorrow morning, as the European market opens up, we start to see some bearish signals in place, then I may be interested to look at a short opportunity in here. But that's what we're seeing at the minute, guys. As you can see, we've broken out of the range, pull back, retest, high probability opportunity to short. So dollar CAD short, definitely on the list. Just need a bigger pullback, more expensive price to sell at, and then we get to move short. Dollar Swiss, guys, as we know, boring. Not on my list to trade. Still stuck in a 200 pip range, 96 to 98. Pissing around in here, nothing exciting. Again, a break lower to confirm shorts, break higher to confirm longs. Nice and simple. If we meet lows and start to move high, or if we meet highs and start to move low, you've got a 200 pip range in there. So let's say, for example, we come back down to test 96 and price starts to progressively start picking up, then you've got some Swissy weakness moving in that direction. So Swissy weakness, yen strength, Swiss yen short, euro strength, euro Swiss long. Start to think about how you can put 2 and 2 together. And dollar yen, I've got 108 as a target. Again, a break above 108, then yes, open up the doors for some longs. And we've been following this mark for some time now. A break below 108 and a clean break below 108, open up the doors for some shorts. I personally believe we might start, as we're back testing 108, we might start to move slightly lower. If we see the equity market fall off, we may fall into risk on, see some safe haven buying. Japanese yen may pick up a bit of strength, and we may start to move a little bit lower. So unless we're well above and cleanly breaking above 108, I'm not interested in trading dollar yen. Or unless we're cleanly breaking below, I'd like to see a couple of days worth of selling before I actually dive in. But let's see if we can start to move lower, then our smaller time frames will cycle and give us core opportunities. So daily shows us direction, smaller time frame, more bars, cyclicity, more trading opportunities is where we can make our money essentially. Brilliant, guys. That was the majors. Just a quick recap. Any questions so far?